What's the first thing you think of when you hear the word exchange? Most people probably imagine a place like a stock market where people are trading shares. But what if I told you there's a whole new world of exchanges beyond that, where you can trade digital assets like Bitcoin, Ethereum, and other cryptocurrencies? Welcome to the world of crypto exchanges. In this video, we'll dive into centralized exchanges, CEX, and decentralized exchanges, DEX, and help you figure out which one suits you better. Let's start with centralized exchanges, or CEXes. These are platforms like Binance, Coinbase, or Bybit, where a third party manages your transactions. It's kind of like how banks operate. They hold your funds, match you with buyers and sellers, and help make your trades happen. They're convenient, fast, and pretty user-friendly, ideal for beginners. But there's one key point you should be aware of. You don't technically control your funds. If the platform gets hacked or goes down, you could be at risk. Now let's move on to decentralized exchanges, or DEXes. Unlike CEXes, DEXes let you trade directly from your crypto wallet. No middleman, no third party. It's all powered by smart contracts on the blockchain. Platforms like Uniswap, PancakeSwap, and SushiSwap are some of the most popular DEXes out there. One major difference is that in DEXes, the liquidity comes from people like you. Users provide the funds that others trade against. It's called liquidity pooling. And in return for offering liquidity, users earn fees. It's a more community-driven model, but a bit trickier for beginners. Now, let's talk about features, security, and regulations on both CEXes and DEXes. On a CEX, access is simple. You just sign up, verify your identity, and start trading. DEXes are a little more complicated. You'll need a crypto wallet and some tokens to cover gas fees. The upside? You get more control, but the downside is it's less user-friendly. CEXes are constantly adding features like staking, futures trading, and even NFT marketplaces. Meanwhile, DEXes are evolving with features like yield farming and liquidity pools, where you can earn passive income by providing liquidity. Both types of exchanges are in a race to offer users more options. One major difference is regulation. CEXes are heavily regulated, which means they have to follow Know Your Customer, KYC, and anti-money laundering, AML, rules. DEXes, being decentralized, are less regulated, though this may change as governments look to impose new crypto regulations. When it comes to security, both types of exchanges have pros and cons. CEXes have robust security systems, but are centralized, making them prime targets for hackers. DEXes, being decentralized, don't store your funds, which makes them safer in that regard. However, smart contracts on DEXes can have vulnerabilities that hackers might exploit. Liquidity is a crucial factor in trading. CEXes generally offer higher liquidity, meaning large trades can happen without significantly affecting the price. On DEXes, liquidity comes from users, and while many have enough liquidity for most trades, it can be an issue on smaller or newer platforms. CEXes typically have fixed fees that vary based on your trading volume, while DEXes fees depend on network congestion and gas fees. If the network is busy, it can cost more to make trades on a DEX, especially on blockchains like Ethereum. If privacy is your thing, DEXes are the way to go. They don't require personal identification like CEXes, which often require full KYC procedures, especially when you're dealing with fiat currency. When it comes to user experience, CEXes take the lead, especially for beginners. Most CEXes have simple interfaces, mobile apps, and offer step-by-step guides on how to trade, deposit, and withdraw funds. Customer support is often available, and you can even find advanced features like stop losses and staking, all with just a few clicks. On the other hand, DEXes can be a bit more technical. you'll need to be comfortable using a crypto wallet, navigating gas fees, and interacting with smart contracts. It's not impossible to learn, but DEXes can feel more complicated, especially if you're new to the crypto space. Once you get the hang of it, though, DEXes offer powerful features like yield farming and more control over your trades. That said, DEXes are evolving fast. Some DEX platforms are starting to become more user-friendly, with improved interfaces, tutorials, and lower gas fees on certain blockchains like Solana or Layer 2 solutions like Arbitrum. As the crypto world advances, DEXes are closing the usability gap with CEXes. One area where CEXes still have a clear advantage is fiat onboarding. Most CEXes let you trade with traditional currencies like USD or EUR, making it easier for beginners to jump in. DEXes generally require you to have some crypto in your wallet to start. So, what does the future look like? We're already seeing hybrid exchanges emerge, blending the user-friendly aspects of CEXes with the decentralized features of DEXes. Both CEXes and DEXes are here to stay, each serving different user needs. Now the big question, should you choose a CEX or a DEX? It really comes down to your priorities. If you want convenience and don't mind giving up some control over your funds, then a CEX is a good fit. But if you're after privacy control and don't mind navigating a steeper learning curve, then a DEX might be more your style. And that's it for today's video. If you found this helpful, please hit that like button, subscribe, and drop any questions you have in the comments. Thanks for watching, and I'll see you in the next one.